Welcome back to The Explainer. Today, we're tearing into Exide Industries' latest fiscal report, specifically looking at their Q4 and full-year results for fiscal year 2026. Now, if you're tracking the global energy and auto sectors, you already know legacy manufacturers are facing some serious transition pressures right now. So, we're going to take their official filings and board announcements, cut through the corporate jargon, and pull out the actual actionable insights. Let's get right into it.
Here's how we're breaking down the report today. First up, the executive summary. Then we'll hit the FY26 financial highlights, followed by market headwinds and tailwinds. Finally, we'll wrap up with a look at their lithium-ion future. All right, starting off with Section 1, the executive summary and the core outcomes from the recent board meeting. So, the board of directors met on May 4th, 2026 and efficiently greenlit the year-end results for both standalone and consolidated financials. But the real headline here, they secured a totally clean, unmodified opinion from their statutory auditors, BSR & Co. LLP. You know the drill. In the financial world, an unmodified opinion is exactly what you want to see. It basically means, yes, the books are clean and fair. Oh, and they also locked in their 79th annual general meeting. That's happening virtually on July 10th, 2026. Now, let's talk about the part investors actually care about, the dividend. The board recommended a final dividend of 2 rupees per equity share. Since the face value of a share is just 1 rupee, we are looking at a massive 200% payout for the financial year ending March 31st, 2026. Honestly, a payout of that size is a giant flashing signal from leadership. They are practically shouting that they are highly confident in their cash reserves and overall financial health. Moving on to Section 2, let's look at the FY26 financial highlights and dig into the actual numbers. When you look at the quarter-over-quarter momentum, Q4 really built on the gains we saw in Q3. Consolidated revenue from operations took a really healthy jump, accelerating from just over 4,200 crores in Q3 to north of 4,735 crores in Q4. That's a solid indicator that as the financial year was winding down, their sales momentum wasn't stalling out, it was actually stepping on the gas. Zooming out to the full year, Exide is showing some incredibly consistent top-line growth. Looking at total consolidated income across the last 2 financial years tells a pretty compelling story. Back in FY25, they pulled in roughly 17,350 crores. For FY26, they smashed right past that 18,000 crore milestone, landing at 18,096.21 crores. To put that into perspective, despite an absolutely wild global environment, their core business of pumping out storage batteries is not just stable, it is actively growing. There is a quick caveat here, though. You'll want to note a specific exceptional item on the balance sheet. Basically, in late 2025, the Indian government notified 4 new consolidated labor codes, essentially boiling down 29 old labor laws into 4. Exide has actively assessed and disclosed the financial impact of this as an exceptional item. They're still monitoring the final rules to nail down the exact accounting effects, but it's a critical regulatory hurdle that pretty much all large-scale manufacturers in India are dealing with right now. Okay, Section 3. Market headwinds and tailwinds. Let's look at the operational context behind those numbers. Exide didn't hit those numbers in a vacuum. They had to navigate a seriously complex landscape of opposing forces. On the headwind side, their export business took a real hit from geopolitical tensions and global shipping disruptions. Plus, they were fighting rising raw material prices and rough currency fluctuations against the US dollar. But, counteracting all of that, some massive tailwinds. GST rationalization gave end customer demand a huge shot in the arm. The absolute standout metric, however, is the 25% plus growth in the Auto OEM sector. Toss in double-digit growth in infrastructure, and balancing those scales is exactly how they pushed past that 18,000 crore income mark. This dynamic brilliantly captures the leadership's mindset right now. Managing Director and CEO Avik Roy made it clear that in a volatile market like this, the goal isn't just growth for the sake of growth, it's profitable growth. He hammered home that preserving cash, maintaining a fortress of a balance sheet, and generating positive cash flow were the top priorities. That disciplined, almost ruthless focus on cash is exactly how they're cementing the strength of their brand and those all-important OEM relationships. And you know what? That discipline paid off literally across the board. That 25% plus growth in auto OEMs we just mentioned, that was actually their highest ever quarterly revenue for that specific business segment. But it's not all about cars. They posted really robust mid to high teens growth in their inverter and solar businesses too. And if you look at auto replacement and infrastructure, excluding telecom, they expanded by double digits. Management is fully expecting this strong momentum to just keep rolling right into the first quarter of the new financial year.
that brings us to Section 4. Let's talk about strategic growth and the lithium-ion future.
This is where things get really interesting. Exide is using its current stability and its total dominance in legacy lead-acid batteries to literally bankroll the future of energy. The report details their massive new lithium-ion manufacturing project, which is essentially the physical bridge between their legacy profits and next-gen tech. So while traditional batteries are paying those fat 200% dividends today, they are plowing capital into process automation and cutting-edge facilities to make sure they don't get left behind in the electric transition. Management has laid out some very imminent, clear-cut milestones for this facility. Right now, they're going full tilt on Step 1, finishing up the installation and commissioning work. Once that's done, they pivot straight into Step 2, which is kicking off customer sample deliveries specifically for cylindrical cells. And then, right on its heels in Step 3, they'll fire up production trials for prismatic cells. The best part? They are already deeply engaged with key OEMs and energy providers to build offtake for these markets, meaning they're locking in the buyers before the tech even rolls off the line. So we've seen the impressive cash preservation, the 18,000 crore revenue, and the massive dividend payouts driven by their classic products. But here is the multi-core question we have to ask to wrap up this explainer. How fast can Exide leverage its legacy market dominance to actually win the upcoming lithium-ion race? As they start shipping out those first cell samples, the entire industry is going to be watching closely to see if they can replicate 7 decades of lead-acid supremacy in an entirely electric era. Thanks for tuning in to the report today.